This is Dubai, the land of sand, bling, and endless tax-free income. It's strategically positioned as a global hub. And the infrastructure? World-class. And look, I get it. Professionals from across the globe are actively investing here, and the UAE's economy is thriving. All sounds very fancy, very master of the universe. Dubai, they say, offers attractive opportunities for long-term ROI. But here's the thing. While Dubai might seem like the financial equivalent of a golden retriever puppy, all cute and full of potential, you have to monitor key metrics. And not just the ones they put in the glossy brochures. We are talking about the overall economic outlook, currency strength, supply and population growth figures, and crucially, price trends. Because, spoiler alert, this isn't about the emirate as a whole. You need to narrow down on specific areas. There are multiple attractive investment zones driving people to purchase or rent. You've got British buyers apparently motivated by lifestyle considerations and favorable currency exchange rates. And then there are the Indian investors who are apparently pursuing properties that serve as both personal residences and income-generating rental assets. Or as I would like to call it, the adult version of wanting your cake and eating it too. Then renting out the crumbs for profit. But here's the actual real talk. Out of many communities in Dubai, some are established and some are, well, let's just say they're still working on their personality. And some of these places, they come with overrated yields, plus high service fees and shockingly low tenant demand. That's why picking the wrong neighborhood can literally make or break your investment. So, where do you start? Examining every single area one by one? That would be insane. No, here's something simple. Watch the show. So welcome to Real Deal Dubai, where we do the legwork so you don't have to. Alright, this is the numbers game, where we dive headfirst into market statistics and data. And let me tell you, these numbers are doing more than just game. They're practically doing the Marina on your spreadsheets. Dubai's property market is apparently continuing its 2024 records in 2025, which is a nice way of saying it's still absolutely bonkers. We are talking 114.1 billion dirhams in deals just in the first quarter of this year. That's over 42,000 property transactions in 3 months. Now, while Palm Jumeirah witnessed 1,631 property deals in 2024, get this, JVC or Jumeirah Village Circle for those not fluent in Dubai acronyms, recorded over 2,200 apartment sales in March alone. March. So apparently, everyone decided, you know what, I need a small box to live in JVC this month. For maximum returns, they say areas with infrastructure development and lifestyle appeal along with master planned communities are the key factors. Which translated means don't buy in the middle of nowhere unless you plan on building your own mall and a metro line with your bare hands. Because areas with limited access to these facilities often struggle to attract and retain residents, which in turn impacts property values and rental yields. And by impacts, I mean it sends them into a nosedive faster than a camel at a sand dune rally. Sometimes it is crucial to understand the nuances. Like for instance, International City. Now on paper, it may seem like a bargain, but it may not be suggested as a favorable investment location. Why? Because capital appreciation can be challenging due to the age and construction quality of some buildings. Although credit where credit is due, the area apparently has decent rental returns. So you might not make a profit on selling it, but you can probably rent it out. But then look at Dubai Sports City. Back in 2013, it lacked essential bus services, which made it about as attractive as a root canal. Today, however, it's a well-developed area with robust infrastructure appealing to both affordable and mid-high-end market segments. Who knew public transport was the secret sauce to property appreciation? One of the critical aspects of investing in Dubai's real estate market apparently is anticipating future infrastructure developments. So let's look beyond the brochure with its promising features and fancy location highlights. Once you start the meal with the numbers, you need to analyze and digest the main course with scouting the areas. First, the big questions. Will this community and this neighborhood create a new landmark? Second, what about the short-term rental returns? And third, can the area's prestige factor ensure it outperforms during market peaks? And finally, is this prime location prime enough for minimal commute times? Or will you spend half your life stuck in traffic while your prime apartment mocks you from a distance? Every area serves a different purpose. There is no one-size-fits-all solution. If there were, I'd be selling it on late-night infomercials right now. But here's what they're telling us. The fancy apartments in downtown Dubai are a top pick for people looking for rent. This area saw 4,436 transactions worth 14 billion dirhams in 2024. Rental yields supposedly range from 5.5% to an impressive 12.07% for smaller units. Palm Jumeirah, the place shaped like a tree, offers a luxury villa community. Investment returns vary with property type. Villas yield 3.83 to 4.79%, while apartments deliver 3.8 to 19.27%. And get this, the highest yields come from studio apartments, which stand at an incredible 19.27%. So the smaller the shoebox, the bigger the return. Then we have Dubai Marina, the perfect blend of accessibility and amenities, continuing to remain a favorite spot for unmatched lifestyle value. And by unmatched lifestyle value, they mean lots of fancy boats and people taking selfies with them. 2025 has been witnessing 6 to 8% rental yields here. Studio and one-bedroom units are the top heroes, with prices seeing 12% year-on-year growth. So, if you like the idea of living in a concrete jungle by the water and don't mind the occasional yacht party next door, this might be your jam. But if you're looking for affordability and returns, then Jumeirah Village Circle, or JVC for the cool kids, is apparently an attractive option. With every square foot costing 1,282 dirhams for apartments and 1,373 dirhams for villas. The rental returns are also strong, 7 to 14% for apartments and a mind-boggling 6.16 to 21.5% for villas. So basically, you could be making more money renting out your villa in JVC than some people make in a year, which frankly is both exciting and slightly terrifying. And then there's Dubai South, designed as a self-sustaining city and apparently the next chapter of Dubai. The expansion of Al Maktoum International Airport triggered its growth as rental prices jumped 24% in 2024, leading all Dubai communities. So if you like the soothing sound of jet engines and smell of aviation fuel, this could be a golden ticket. Narrowing down on areas with infrastructure development and lifestyle appeal, followed by choosing premium developments by reputed developers, can deliver stronger returns. Because, shocking news, buying a good product from a reliable company usually works out better than buying a shed from a guy named Mad Max in the middle of nowhere. However, there are areas still developing and may end up having the potential for future growth. We've come to the expert spotlight section, and who better than a person who's been in the real estate sector since 2000 to give us his unfiltered views on the subject. We are talking about a reality check on the ROI here, and Mr. Ayman Youssef joining us. He is the managing director of Coldwell Banker. Thank you so much for joining us today.
Thank you for having me.
So my first question to you is, what are the common mistakes that you see in investors while choosing locations, especially in the UAE?
I think one of the most common mistakes that a lot of investors, they don't do like their due diligence and don't take informed decisions. What I would suggest, because every location could potentially be a good location, but there are a lot of things that need to be taken into consideration, like how integrated this location is to the city, all of the amenities around, shopping centers, public transportation, highways, accessibility, and so on forth. So what I advise investors that they need to gather a lot of information before they jump into a decision.
There are also some developing areas that they say. For instance, there is an area in Dubai where developments are going to happen, or the metro line is going to be promised very soon. And what happens to those kind of promises? How does that impact any kind of real estate value there?
In general, it all depends on your risk profile, because you can adopt a strategy where you go to undeveloped area, which will in the future have better infrastructure, like Expo, for instance, or Dubai South, and which will have better integration, better airports, and so on forth. But it will take time till it happens. And another safer option, but doesn't have a lot of headroom, is to get into an area where it's already integrated into all the communities is formed. There's not a lot of construction going on. In this case, I'm talking about downtown or any of these areas which are already part of the city.
So the more developed it is, the more the payment, right?
No, it's not about the payment. It's about that the potential gains in terms of the price. Mm-hmm. You have bigger headroom in undeveloped areas. So if you get into an area which is not developed, right, you take a little bit of risk, but you have some headroom in terms of where the price could potentially reach. Versus to go into an area which is fully developed, it's safe, because even if the market slows down, even if the plans get a little bit deferred into further down into more years to materialize, then at least you're in an integrated community which is formed.
So then can you give me a little sneak peek into which will be the most safer area for me to invest in right now, so that I can make potloads of money in maybe say 5 years from now?
There is no one recipe that fits all. There is no one right answer for this. But in general, what I personally would recommend to my friends, family, clients, is to get into an area which is already developed. Because if the market slows down, then other developments might take longer time. So a developed area has a better chances to.
Can you give me an example of an area that may be developed but could also be overhyped because of the neighborhood and may not give you promised returns?
So an overhyped area which is somehow developed is Jumeirah Village South. All of these small investors who are trying their chances, taking their chances, and promising a lot of things, like many amenities, a lot of better finishing standards, and so on forth. But this pocket will have a lot of oversupply. So an investor who's entering this market at above 1,500 dirham per square foot, I think it's a little bit of a risky proposition. Yeah.
So when you talk about areas like Jumeirah and then areas like downtown, so there is always this rental demand versus capital appreciation.
Yes.
How do you think these two factors will play a role in evaluating the real estate market or the potential value of that property?
So the way that we look at the market, we see that the rental is the driving force behind the market. So as long as there is a good yield and good return on investment, there will always be an investor who's willing to come and buy these assets. So a healthy rental market is more assuring rather than to get on the capital gains. And the capital gains will eventually happen, but again, and it needs to be considered. Over longer period of time, eventually real estate appreciated just because of inflation, because of currency devaluation, and so on forth.
Where would you advise a person not to invest when it comes to looking at the ROI of the property value in Dubai?
So again, if you want to maximize your returns, you want to look at the cost of ownership as well. There are some of the most prominent addresses in Dubai, but the service charge is significantly high, and so some of these branded residences, some of these it's the cost of ownership is too high. So it's not a product which cater to the yield side.
Right.
But a lot of people buy it, a lot of investors, they want the status, they want the address, and they want a potential future capital gains. Versus somebody who wants the yield, then I would advise to go for townhouses and villas because the cost of ownership is significantly lower and there is less supply coming in, maybe less than 20% of the total supply in those segments, and there is organic demand for villas and townhouses.
We were also talking about how when you look at the real estate market here, on one side, yes, it is thriving, it is booming. There is also a lot of debate going on whether there could be a potential bust that could happen with respect to Dubai's real estate market.
Yes.
Do you see that happening in the near future?
I'm seeing a healthy correction coming in certain segments.
Okay.
So it's going to be a segmented. I think a lot of, again, I'll go back to your question about how the clients and the investors need to be aware of what's going on. They need to be aware on which segment they're entering and which segment they need to exit.
Right.
Because we cannot take a broader approach and say, okay, the whole market entirely will do amazing or not amazing. So my expectations, yes, there are a lot of supply coming in the next couple of years. And there are, in certain segments, there is a potential correction. But we're not seeing anything drastic. We're not seeing a bubble. We're not seeing what happened in 2008.
Right.
We're seeing developers are super well financially equipped in terms of their cash reserves. We're seeing a lot of regulation protecting all the stakeholders. We're seeing less leverage. 75% of the transactions are cash. And we don't see a lot of speculation. But in general, on the supply side, I think certain segments, especially in the apartment sector, going to be under some pressure.
Well, you did mention about regulation. So what kind of credibility can one bestow upon the developers when it comes to trusting the person for investing in his or her project?
So a developer, again, it's specs is something. When you go invest into a development, you look at the spec sheet, what they're going to deliver, and so on forth. Right. And there is another angle that a lot of clients are unaware of, the living experience in this location later on, how this property is going to be managed.
True.
So a developer with a track record, most probably my recommendations go for master developers who have the scale and have the knowledge and know-how and the experience and the credential that they have delivered a good living experience beyond, not necessarily you can be in a building somewhere, good luxury finishes, but the amenities are not well taken care of, or the developer wasn't able to manage it in certain ways. So I would recommend going for a larger developer with a good track record rather than going to a smaller developer who's maybe promising things to be happening. That's like a high risk.
There are so many new areas developing by every week.
Yes.
And when you look at these areas, what are the factors that could lead to a disappointing ROI, for instance, when it comes to the property value there?
A lot of clients have this misconception about that, okay, and a lot of sales agents in the market, they try to refer to the historic trend line, and they approach the client telling them, okay, look at the price in 2020 and look at the price now, assuming that this will continue. And this is, in my point of view, misleading because it's different dynamics. We came from COVID at a very low price point, and Dubai proven to be a nicer place to live in and do business and attracted a lot of wealthy and non-wealthy people to come and have this place as a place.
So you mean to say that the prices could stagnate at some point?
Yeah, because real estate is cyclical by nature. The cycle in any market in the world, except in some markets where the currency is so weak, it keep on going up because the currency is falling, okay? But in general, real estate by default is cyclical. Why it's cyclical? Because the demand, when the rentals are very high, This trigger a lot of demand. A lot of people want to ease down on the rent or want to maximize their potential earning. And then developers start launching day after day after day. You have a lot of supply coming in. Yeah. And then when this supply happened, it happened 3-4 years later. After the launch, and then you have a lot of oversupply. And then that's in general. I'm not talking about Dubai in specific, but I'm talking about this is the nature. And then it goes through a different cycle where it stabilizes and then goes through some correction. But the good news about real estate that when you take a trend line over a longer period of time, then most of the time it's appreciating and it's good on the income and on the return on investment.
Talking about the trend line, so would you say that today's hotspots could turn into a risky proposition tomorrow?
Some of the areas in Dubai doesn't have a lot of headroom in terms of price increase. So if you are someone who wants to be here on a longer horizon, like you want to adopt a 10 years plan, then I'm very optimistic. On a 10 years plan, I'm very optimistic. If you're a first-time home buyer, don't pay rent. Just raise finance, get mortgage, and go live in a place that you own, and you will build equity over time. If you are someone who wants to diversify their investment and have extra cash, then real estate is great. But if you're coming on a speculation or get overpromised that in a couple of years you're gonna go to the moon and back, no, then better watch out. Yes, and so be careful about your choices as well.
So if I win the lottery tomorrow, I know who to come to for advice.
Yes.
But for first-time investors in the UAE, what would be your advice when it comes to top 3 things that they must search while hunting for a property?
Okay, very important that they don't just follow the hype, and they do research, like proper research. And the good things about Dubai, that the data is available, and it's a very transparent market compared to the rest of the region. All the data are available for public. And the second advice, they need to have the financial capacity that if we see some headwinds, they are not under pressure, that they don't have to. So they should have the financial means to continue their installments and should have some holding power. Yeah.
Based on your experience, where you've been dealing with over hundreds of clients, you've advised them on where to invest, where not to, what kind of projects to go for, what kind of value proposition that you would be giving them. What is the one lesson that you wish every investor would learn when it comes to the real estate market here?
Okay, just investors need to know that the nature of real estate is cyclical. And when you invest, no matter what asset class, you need to understand that with investment come opportunities and come risk. So it depends on the risk profile. There are some pockets in the market, high risk, high gains. There are some pockets on the market more matured, solid, even if things go like a little bit under pressure, but these products will and opportunities will eventually hold better. So my advice is to take an informed decision rather than to go psychological and see some posts on Instagram, hundreds of people waiting in line overnight because they want to take a piece of, I don't advise clients to take decisions based on the sentiment. Sentiment is great, but not enough. Data is more important than sentiment. So that's my advice. Yeah.
When it comes to long-term sustainability of new developments, especially if you're looking at a developing area or potentially rapidly growing area, what would you look at when you're evaluating the long-term sustainability of that development?
Okay, so we need to look at how the infrastructure is evolving in these areas. What are the traffic generators, like when we talk about Expo or we talk about Dubai South with the airport coming in? This is a massive demand generator,
Correct.
So there are a lot of areas in Dubai that you just need. Again, we had a chat earlier about how the metro line will impact some of the areas. So the integration to the city and how the city is moving in certain direction, this need to be taken into consideration for what the future could look like in those areas.
Is there a particular deal or a project that has been one of the most turning points in your career and why?
I think one of the deals that we sold an entire district in Jumeirah Village South. It was 1.6 billion dirhams. It's back in the days. And it's not about the monetization of the deal. It's not about how much we earned out of it. But it was a learning curve because we sold 106 plots to a group of investors, and then we were able to make a lot of profits to them. And then from the profits, we were able to advise them to buy and to acquire other plots in Dubai. Then we got into development. So it gave me a lot of insights about the costing, cash flow, returns, and so on and forth. So I wasn't only on the brokerage side, I became on the other side of the developer as well. So I was sitting on the developer seat. And this gave me a lot of insight and a lot of knowledge.
My final question to you. Since you said that the property market is always cyclical,
yes,
how do you see this entire cycle overturn in the next 5 years?
I'm in general very optimistic about Dubai because, you know, even we have a lot of branches globally in Europe, in Africa, in US, and so on and forth. But when I compare where we have reached in terms of regulation, adoption of technology, a transaction that can be seamless, takes no time, and then can be fully digital end to end. Right. Now a lot of talks about tokenization. So I feel that we're really accelerating in the right direction, and I'm very confident and comfortable because of the regulations and because of the safety and the lifestyle and all the things that we know about Dubai. So in general, I'm seeing some healthy correction in certain pockets in the market. And I think it's good for the market because otherwise there will be more supply coming in. And this will lead to a more price increase, but now a healthy correction along the way will contribute positively to the sustainability of Dubai. So I am very optimistic, but certain pockets, a lot of investors and a lot of developers need to be cautious about some headwinds that we might see in the future. Yes.
Thank you so much for that unfiltered view, Mr. Youssef. Thank you
so
so much for joining
right?
us. Absolutely unfiltered, and that's exactly what we want here. So I hope the viewers have taken down their notes in terms of the price correction, the caution that they need to exercise, as well as looking at things that would drive the market on a more optimistic fashion. Don't go anywhere because we have much more coming up on the show. All right. It's time to analyze a real Dubai listing and tell you if it's a buy or a buy. This week, we have this amazing property at Dubai Sports City, a fully furnished studio for 850,000 dirhams. It comes with a built-up area of 609 square feet, parking availability, and a balcony size of 92 square feet. The listing promises a yearly average rent of 55,729 dirhams. It's a quieter area than the bustling city center, offering a more suburban feel, which is nice if you like the sound of, well, less noise. Connectivity to major highways like Sheikh Mohammed bin Zayed Road is good, making commutes manageable. However, it's still developing in parts. The advertised average rent of 55,729 dirhams gives a decent gross yield of 6.56%, and the net yield of 4.37% is actually quite respectable for a studio apartment, especially when considering the potential for capital appreciation in an area like Dubai Sports City. And here's the kicker. Studies indicate Dubai Sports City has significant price growth. Example, 54.5% over 36 months, 17.3% over 12 months, and has strong forecasts for continued growth. So basically, this little studio has been on steroids. So for the investor who understands that real estate is a long game, not a get-rich-quick scheme, and who recognizes the steady demand for affordable quality housing in Dubai, then yes, this studio is a buy. It's the sensible, reliable friend who always shows up on time and doesn't try to borrow money. But if you're looking to get rich overnight, or you expect this studio to turn into a penthouse in 6 months with a personal helipad, then it's a buy. Go find your golden goose elsewhere, because this one's laying steady, sensible eggs. Always do your due diligence. Crunch those numbers like your life depends on it, and remember, Dubai is not just for billionaires, it's also for savvy investors who aren't afraid of doing a bit of a homework. Or watching the show. So let's sum it all up with the Real Talk recap and discuss what we learned. When assessing areas for investment in Dubai, it's important to differentiate between rental returns and capital appreciation. Because sometimes you get great rent, but the value of your property is dropping faster than my hopes and dreams on a Monday morning. Also, tenant management can be challenging. While certain locations with lower ticket prices attract a larger pool of buyers, enhancing liquidity, areas not well served by public transport may require more time and effort to sell properties quickly. And here's a crucial one. Investing in areas slated for future infrastructure upgrades, such as new metro stations, can lead to significant appreciation in property values over time. So basically, if you get inside information on where they're going to put the next fancy train station, you're golden. And finally, areas with strong infrastructure already in place consistently see high rental demand, which are crucial indicators for long-term property value with the potential for substantial capital appreciation. So sometimes the boring, well-established areas are actually the smart play. Who knew? Bottom line, with careful selection, your Dubai property can provide both stable income and impressive growth. Because here, it's expectations that run the market and not just location. Although location still helps, let's be real. Next week, we are diving into communities that could possibly be overhyped. We'll give you the real talk on price versus value at Dubai's hotspots. And before saying goodbye, remember to subscribe, hit that like button, and tell me in the comments, are you an investor looking for an affordable community with good rental yields? An investor looking for long-term yields? Or are you a property advisor with ready insights on the market? See you next Sunday on The Real Deal Dubai. I'm Pratibha Raman, and you stay real.